Hey, good afternoon, everybody. Tom Stewart here. I'm with Liz Trotter. This is Smart Business Moves. Liz, Matt Ricketts is with us today. Matt is been spending a lot of time. He and I have been talking along with, I guess, Joe Walsh and a couple other people, and trying to figure out what there is to figure out about PPP and some new tax credits that are coming our way, and taxes, and it's all looking pretty good. How are you today, Matt?
Doing well, Tom. Doing well.
Hey, Sam.
Can you hear me?
Howdy.
Yeah, we hear you, Matt.
Shoot.
Yeah, you're doing good, Matt.
Hey, Denise.
You got one hello and one howdy. I like that. Before we get too deep into it, maybe we should talk about what we're going to be doing the rest of the week. We're going to be talking about PPP today, all things PPP and tax credits and taxes, and just a lot of what we know so far about the legislation that was signed into law last night. What are we doing tomorrow, Liz?
Tomorrow we're going to be talking about best business books of 2020. You just do a quick recap of some of our best business books and recommendations going into 2021. Finish up this good list.
Are these books that were written in 2020 or books that just made it to the top of our personal list in 2020?
No, that's it. Top of the list. I need your list, Tom. What were some of your favorites too? You send that over to me if you could.
Okay. Well, these are business books, right?
Yeah.
Okay.
If you have some personal fiction, share.
Romance novel.
Well, yeah. Go ahead. Send us your Harlequins too, Tom.
With Fabio on the cover. Yeah.
Dating yourself there, Tom. Dating yourself.
There was a time. Hey, Wednesday, we're going to be jumping back into the KPIs. We're going to be talking about profit, and we've been kind of doing a deep dive on that, but we've gotten some positive feedback, so we're going to pick up on where we were last week, and I guess week before last, and we're going to keep rolling on that. And then we're done for the week because Thursday is New Year's Eve, and I'm hoping that everybody's got something better to do New Year's Eve and hang out with us and do smart business moves. Not that we don't, there's some value here, I guess, but come on, New Year's Eve, there's got to be something better going on, right?
We're doing a now show, Tom. What's a now show?
Oh, it's a no-show.
Oh, that makes so much more sense than a now show. I was like, I'm very showing now at the end of 2020.
Where did that come from?
Oh.
It must be a bug or something.
I thought it was like now show. All right.
So,
hey, Denise. Oh, Starlene. Got a bunch of people popping on.
I guess it was about a week or so ago, give or take, that the House and the Senate passed a bill, and everybody was getting excited because it held a lot of promise for small businesses in a lot of different ways. And then the president came out and said that he didn't think it was an awesome bill, and there was some disparaging remarks said, and I guess some despair that maybe this wouldn't happen. But sure enough, sitting here today, it was signed into law last night. So, Matt, what do you think about all this?
Yeah, I think it's exciting. I think that there is a little bit of what happened, I think, in the media and with the president was conflating the two different bills. I think as business owners, we should be getting out in front of this and saying this is a wonderful bill that's actually going to save millions of jobs and save thousands of small businesses. And we need to be messaging on that strongly because it is a good bill. The part of the bill that was, riddled with pork is just the annual budget of the U.S. government. Like there's that part of it, was tied to this bill. But the relief bill has tons of goodies that are valuable for us, that are going to make a huge difference in your ability to be competitive this year and be well capitalized in a year that you might have otherwise been struggling. So I see this as an opportunity for all of us to come out of the other side of this stronger, have a better workforce than we've ever had before, and and be more competitive than we've ever been before in the marketplace, as far as, as far as talent goes, as far as, our team that we're going to build.
Yeah, I mean, I guess one of the things that we were concerned about, we talked about over the last few weeks, was the prospect of not being able to deduct the expenses from the first round of PPP, meaning that our taxes that we'd be paying in 2020, here in about 3 months, we'd have to get our checkbook out and sharpen our pencil and write a check a lot larger than maybe what we've grown accustomed to.
Yeah, that was going to be worrisome, and I think that was holding a lot of capital back from being spent in the marketplace. So that alone so what you're talking about is they corrected, or at least maybe they didn't correct it, but maybe the intent was right the first time. But they're saying now that you are not going to be taxed on the things that you spent the PPP money on, so payroll and other expenses. In addition, Tom, I don't know if you're aware of this, they lowered the threshold to 60% of the wages only need to be spent on payroll. They allowed some new things like software as a service, like SaaS products, accounting, some other business services.
I saw that for round 2. Is that also applying to the forgiveness calculation for round 1?
I am not 100% sure on that, but I think so, because they also did one other thing that if you haven't done your forgiveness and you'd held off, was originally that EIDL or EIDL grant of $10,000 that you received if you signed up for that. That was not going to be able to be forgivable as part of your PPP. So if you got $100,000, they'd take $10,000 right off the calculation. You'd only get $90,000 forgiven. Now you'll get that $10,000 forgiven as well. So they made a lot of fundamental changes. Now I don't know for sure, like I just said, if that's going to apply to the first round, but I do believe so that a lot of this are going to be provisions that are going to apply to both. But we'll see. Ultimately, there's going to be a lot of us that are going to need to be double checking with experts. My first interpretations of running through this, and the sources I'm getting is they're getting out the information as fast as they can. But it's a 5,000-page bill, obviously. And again, some of that was the omnibus spending bill, and some of that was this bill. I have no idea how much this relief bill, how many pages this was, but there's quite a bit to this, I'm sure, and they're digging in as fast as people can and getting out that information. But if you can again lower that threshold to 60% wages and use it on some more of these normal business expenses that we all have, that's going to be a good thing, because one of the other things we wanted to talk about today was maximizing your forgiveness period. Originally, you either had to pick an 8 or a 24-week period. Now you can pick any forgiveness window that you need to maximize forgiveness. And there's going to be a big advantage to that with some of these. They're called ERTC tax credits, the employee retention tax credits. Are we moving too fast here, Tom?
Let's back up a little bit and take it at a higher level. So at a high level, there's 3 awesome things that are happening here. One is we're not going to have to pay taxes on the monies that are forgiven that we use to pay expenses, which is going to mean a whole lot to us here in a few months. And if we get PPP funds in 2021 in round 2, it'll help us again next year with that. Second, there's a second round of PPP that's coming out, and the odds are pretty good. If we qualified for it last time, we'll be able to qualify for it again, and we'll talk about what those qualifications are. And third, there's this thing called the employee retention tax credit, which, if you remember, we talked about that some last spring and kind of discounted it because at the time you could either do PPP or this employee tax credit, but you couldn't do both. Right. Now they're saying we can do both. This is like, you thought Christmas was like 3 days ago. Christmas is just came again in a much bigger way. Matt, you want to explain what these tax credits are and what this means? In addition, we all understand what the PPP is. We've done that ad nauseum, been there, done that. How does the tax credit work?
I mean, I think we're all going to probably need to hire an outside service to manage these tax credits for us. I actually I'm already shopping that, but on a top level, the way it works is up to $10,000 per quarter, you can deduct 70% of their wages against the payroll taxes that you pay. So let's say you have $2,000 that you normally would pay in payroll taxes for that person's 20. Well, it would really be 1,500. About 15% basically in payroll taxes towards that person. Now you multiply that times 0.7%, and you can deduct that and take that as a payroll tax credit, which they will not take out of your weekly or biweekly payroll taxes. However, it's retroactive now, so you can actually go back and claw back all the money that you've paid, basically. So basically, none of our employees make more than $10,000 a quarter unless they're an awesome manager or a really high level tech that is just, that would be a very high level technician for us. I have some employees that might be earning close to that, but not.
You might have some people in leadership, managers and so forth that hit that
management for sure. But the rest of your employees are going to qualify at a $10,000 per quarter rate. And then basically $7,000 of that is eligible for tax credit forgiveness on any basically payroll taxes. So when you run your payroll taxes and you see your employer contribution, basically imagine that 70% of that can come back to you. So if you're paying $1,000 a week, you could get $700 of that forgiven and back to yourself. If obviously my number is bigger than that, but as just a demonstrable number, that's a nice.
Isn't the tax credit on the gross wages to be taken off of the tax deduction? If somebody's being paid, say you've got a manager that makes $40,000 a year, they're making $10,000 a quarter, that you would get $7,000 in tax credits?
That's not my understanding. My understanding is that you would get it's off of the payroll tax contribution. So that's still significant. I mean, I pay $2,000 plus a week. I mean, I could be wrong. That could be actually, I was paying close to $4,000 a week pre-pandemic. So my math on that would tell me that that's probably the way that they're thinking it through would be based on the payroll taxes. But if you think it's a tax credit against earned income, then it's even better. But it's only against your payroll taxes, right? So it can't be more than what your payroll taxes would be. So that's
well, it depends on if you can carry them forward.
I suppose I was under the impression that you're talking about under the payroll taxes is where it would be.
It says qualified under the new law. The credit cap is increased to $7,000 for each of the first 2 quarters of 2021. $10,000 in qualified wages times 70% tax credit rate.
Well, maybe you're right. That would be even better.
It would say, wouldn't say wages in that case. It would say, employer taxes, right?
Yeah, I suppose you're right. I'm not 100% clear on that. I was thinking that it was going to be my imagination was that
it does say the tax credit rate, Tom. It says times 70% of the tax credit rate.
Well, that is the tax. 70% is the tax credit, right? So you were getting. Go back to it again. So you were getting a $7,000 tax credit in this case in that quarter.
Yeah, okay, so that probably makes sense because originally this was capped at $10,000 per year per employee, and so my guess is that they're trying to dramatically increase, this. I just don't see how it would be anything other than the payroll taxes. But either way, it's still going to be a large amount of money that we can manage to keep in our businesses. And then we use to make some pretty big investments. So whether I'm right and it's $100,000 or you're right and it's $300,000.
To be clear, there's a lot here that we need to figure out. There's a lot that we don't know.
Yeah.
It's not a matter of this is a good thing or not. It's just a matter of how much is it.
Yeah, how good of a thing. So one thing, Matt, you were talking about that we'll be able to claw back our money that we've already paid in 2020. How will that come back to us? Will that come back to us on our tax return, or?
I don't know if it's going to be a credit or if it's going to, like, you're going to get it. Yeah, you'll get it back in a tax return. Typically, this isn't really something you'd see in a tax return unless you can take it as a credit towards income tax, because this is not income tax. This is something that honestly, this is unheard of. This is, I really don't know how they would give this money back, because it was never our money typically in the past. It was not money. It's funny,
the employer and the employee portion.
Well, the employer portion, I guess it was our money, but it was never money that we were really able to ever figure into our income. It was just, it's always been funneled direct. And so you didn't keep an account on this and be like, oh, I've paid XYZ and I get a refund of this money. It's like, no, this is off the top. Like, this is their cut, right? So,
some tax credits, which are, like the WOTC, which goes against income, you can carry those for like 15 years. So you can earn a bunch of them now and use them, 10 years from now if you want to.
And again, so this is where I think some expertise is going to come in. So I use a company called Synergy Partners. I'm not plugging them. They're no better. There's other companies that do this. I would look to whoever your payroll provider is and see if they're going to have a partnership. I'm willing to give up some portion of what I'm going to get from these credits to a company to manage this for me, because I think it's going to be awfully complicated to do in-house. And
it's worth paying 10, 15%.
So I pay 15%, and I'm very happy to do that on my WOTC credits. And I'll be, even though these are just a slam dunk and it's going to be a lot of money, like you said, I'll be happy to pay another company to do this, because I hate managing paperwork like this, and they take legal responsibility for having it right. So, I mean,
you give that company a power of attorney. So if there's an audit or anything goes a little bit sideways, at least you're not out there by yourself. You got a partner.
Yeah. So that, I think the ERTC credits, however they're going to go, that is a bonus on top of a bonus. Even if you don't qualify for the PPP again, if you didn't have any, you don't have enough 25%, but you had 20% in a quarter, this could be a really big win for you. And there's some other language in there that if there was some mandatory shutdowns and there's some other things that help be qualifying events for the ERTC tax credits.
So let's talk a little bit more about the how you qualify, Matt, because the call that I was on earlier, there was some confusion around, is it just fourth quarter? Can you pick a quarter? What's your understanding?
My understanding, it's any quarter, and any quarter for me would be qualifying this year. I've had a pretty off year. My second quarter is what I'm going to use for my qualifying quarter. We're down over 50% for that quarter. I think we're down 51% for second quarter of this year. And that's my understanding, is that you can pick any quarter in 2020 to make the 25% reduction in business determination. For the
PPP, I've seen that in several places.
Yes.
Like your 20 quarter versus the same quarter in 19. Like first quarter 20 to first quarter 19. For most of us, it'll be second quarter 20 or second quarter 19, because that's when most of the shutdowns, but it could be third quarter, fourth quarter. For the tax credits, it's a little unclear. And again, there's not as much out there about the tax credits.
Not yet.
But this is talking about comparing a quarter in 21 to the same quarter in 19, which
I honestly don't think most people realize that the tax credits are actually such a big win. I mean, it's not even really getting the press. Like you and I have been talking about it, and we're talking about it here, but I see very little about this in the newspapers and even in business journals and things like that. This is a big deal, and I think it's still very confusing and very new, and we don't know. So a lot of this stuff, the SBA has 10 days to come up with all these rules from this bill. So 10 days from the day that he signed it, which was yesterday, there'll be some clarity on this stuff. So we have a little bit of a window on what's going to happen. So 10 days for the SBA to put out the rules. And then probably after that, I think some of our banks will start taking applications
Well, here's the interesting part of it, though, that's I think worth making note of. The rules for PPP, that's an SBA program, whereas employee retention tax credits, that's an IRS deal. So those are like two separate organizations. So they're not necessarily going to be coming up with the same rules. So the PPP, we're pretty clear as to how you qualify for that. Although there's still some questions that maybe we can dive into a little bit there. But this tax credit thing, I don't know.
Yeah, there's a lot of questions. I'm going to try and get on a call with my tax credit company for somebody that's pretty high up. I mean, I will tell you this. I had an early conversation with my tax credit company in probably June of this year. And my this is like a vice president of the company. And my conversation led me to believe that they were pushing hard. They were pushing really hard on the reps to expand the ERTC. And he was firmly believing that he would be able to get me ERTC tax credits this year. And he got me to go ahead and sign on the dotted line, like, to give them the percentage to manage this for me. Because he believed that they were going to be able to advocate for this. I never really believed that was going to come through until I saw this. I just thought it was just too much double dipping. Like, why would they allow us to double dip on all these things? But it's there, and it's going to be a big program. If Tom's interpretation of it is right, that could be massive. I mean, that could be massive. So 70% of your employees' wages.
Because it used to be 50%, if you remember, and it was capped at $5,000 per employee per year.
Yeah.
Going back to last spring, I guess April, when we were playing with these numbers, and we were assuming that those tax credits were $5,000 per employee.
Yeah. No, I think your interpretation is right. Going back to our early conversations last year, I just think the fact that they made it so much more generous per quarter confuses me, because I'm like, where does that money come from? But I
feel confused by the whole thing. It's like, it's way more than we had any hope for.
Well, it has the potential to be. It has the potential to be, I mean, almost larger than PPP. So if you could get, if your average employee does, like 7,000 per quarter, you get basically all last year. So times 4 would be a potential tax credit of $28,000 per employee. Is it 7? I don't really want to dive into this too much, but that's, I mean, it's an absurdly large number in the end. Times 30 employees. I mean, that's 840,000. That's why I don't think that couldn't be quite right. Like that would be, an $840,000 tax credit. I'm like, I'd be happy to have it. But I don't know how that.
You've got up to 14,000 per employee, assuming that they're making, 40,000 a year.
Yeah.
They have to be making 40,000 a year times how many employees?
I just did 40. Actually, that number comes to 560. Yeah. 560,000. It just seems awfully high. And if it is that high, then that's great.
When we did it before, it was capped at 5,000 a year. Now it's capped at 14,000 a year. I mean, that's almost 3 times as much. So
yeah, if
these rules were in place when we were talking about in spring, we would have probably been a lot more excited about the tax credits than the PPP.
I agree. And either way, let's say it generates you $250,000 in tax credits. I'm hopeful that they're going to be able to actually use this against payroll taxes in the future instead of income tax, because I have a lot more payroll taxes than I probably do have.
Well, the program's pretty clear that it's a diminution of reduction of payroll taxes. The question is, if you've got excess credits, can you carry them forward, and if so, for how long?
So I got to turn some lights on. It's getting dark here all of a sudden.
And that would be, I guess, stay tuned. Hey, one thing that we do know or have more information on, and Matt, you were going here earlier, was talking about changes in terms of how the PPP monies can be used. And
sure.
it started out where like a larger chunk, and I'm going back to the spring, what 75% had to be paid, go against payroll, and then it dropped to 65, and now it's down to 60. Is that correct?
60% looks like the number that's in the new PPP, and it would be awesome if it applied to the old PPP, because you could utilize it against some other business expenses that were not originally included, things that are normal business expenses, basically ordinary business expenses. Things like software, things like services, like accounting and things like that.
Safety supplies is a big thing. So
like restaurants that had to go out and buy all this, like these bubbles for people to eat in, right? I mean, whatever the expense was, if it was part of safety.
So if you made investments in, say, electrostatic sprayers and maybe on-site generation, could you rationalize that those are things to create a safer work environment for?
Yeah, absolutely. I actually think that the OSG would be a great one. However, I didn't do it in the period that, like, so those would be if I had done that in the initial 8-week period. Again, the thing is, I think you're going to want to maximize the periods. So if you did make that investment in the same period as the payroll, then that would be a good choice. Although you can pick any period you want. So I guess you could pick the period where you had a bunch of big expenses that are related to that stuff and do so. But again, I think they have to all fall in those dates. So we might have to look at that. But I reasonably think you could argue that if you bought an $11,000 on-site generation machine and you bought, $5,000 worth of electrostatic sprayers or whatever people bought, you could certainly make the argument that those would fall under those PPP and hygiene infrastructure improvements that you would have been making. So yeah, I think so. Again, you're gonna have to ask your accountant, and your accountant's gonna probably be very, very unclear on this too, because they're all learning as they go. But you're gonna have to get professional guidance on this.
Well, I'm assuming if you have already applied for forgiveness, this really doesn't matter much for your first PPP loan, because that is what it is. If you haven't yet applied for forgiveness for your first PPP loan, the logic would be to try to rationalize as much expense as you can to use those PPP funds that aren't related to payroll, because you can't use PPP funds to offset payroll and then get tax credits on that same payroll.
Right.
So
that's why where I was going with it is that you want to basically, you can control with the new rules, you can actually change the period of forgiveness. So before you had to either take 8 weeks or 24. Now you can set your own forgiveness period. You can make it on any start or finish date within a qualifying period, which is sometime in 2020. And you can pick it based on whether there was a lot of other extraneous expenses, which might be a smart idea. But yeah, you're going to want to make that period as short as possible, because you're going to want to basically be able to take the ERTC tax credits in addition to your PPP if eligible for both. And so to do that, you're going to want to have as many weeks eligible for ERTC credits. So any weeks that you're counting as PPP, you can't count for ERTC. This is all super complicated. It's all like,
most banks, I'm assuming most banks, my understanding is most banks already had their PPP loan forgiveness applications out there, and a lot of people have already filed for forgiveness.
I talked to my banker, and they've pretty small bank, and he'd already done 200 applications, and he's like, "Do you want to do yours? Just get it off your plate." I was like, and I'm like, "No, thanks." I'm like, "I'm gonna wait. I want to wait and find out what they're gonna do." And they made it better than I could have hoped for, even with just the idle stuff, and then being able to set your forgiveness period. I mean, both of those things are extremely beneficial. So it was very smart. If you've already done it, just write it off. That decision is done. You just have to, live with the decision. Don't overthink and over worry about all this stuff. But if you haven't yet, great, good on you. You waited it out. You let that little bit of debt overhanging you not unnerve you or whatever. Some people were getting nervous about that if they're not used to having debt. I had a lot of conversations with people that just couldn't stand to have the debt on their balance sheet, so they just had to had to take care of that. So I get it. I'm glad I waited, and I think there's a lot of benefits. There's going to be other benefits once we dig in this to waiting too. So if you haven't, you're going to be in better shape. Sorry, Tom, go ahead.
I think that the government has just decided that, okay, last time we're all about the workers. We were going to give them so much money that it was ridiculous. It would not make any sense. They were getting what, $800 a week, right? And now,
600.
yes, well, 6 on top of the 2. I mean, in our place was a normal 2, so it was $800 a week here. Right. So instead of them getting that, now they're like, okay, that didn't work as well as we'd hoped. Now we're going to give all the money to the business owners, and we're going to see how
there's still some extra unemployment. There's $300 a week. That's gonna probably still make the labor market. The labor market's really tough, and so I think we could probably talk a little bit. We've got some time left on maybe some strategies that we're thinking through to use this PPP money in an effective way. Obviously, we're going to pay our payroll and make sure we're sound, but.
You made me laugh earlier because I know where you were going. You were talking about I had money set aside to pay taxes on these PPP funds. Now I'm not going to have to pay taxes on it. What am I going to do with that money?
I mean, it's an opportunity. I mean, I've had conversations with people, and people are like they're like, you got to be logical with it. It's got to be stuff that's going to improve your business and help you make more income down the road, because again, this is never going to happen again. This is, I mean, I don't know if you guys went through 2008 and everyone was like, God, these bankers made out like bandits. People are going to be looking at like small business owners in 10 years and be like, remember back in 2020 when the small business owners robbed America? I don't want it to be like that, but I can imagine there being like some moments where like when this is all shuffled out, Tom's like, oh, somebody, they're going to be looking for heads to roll. Well, there's so many people that they would have to get through to get to us. Like we're such small players in all of this that it doesn't make sense that they're going to be worried about what we did. But we need to be making logical decisions. We shouldn't just be like going out and buying boats and doing stuff we wouldn't do with money otherwise, right? Like it should be investments in our people and in our businesses and making our ability to have long-term sustainable businesses.
Yeah, let's be clear on this for a minute. I mean, there's still all kinds of rules in terms of what these monies are supposed to be used for. And just because we've got some money in the bank today doesn't necessarily mean we don't know what we don't know. We don't know what the rest of this year is going to look like. We don't know what, wages are going to be going up, taxes are going to be going up, the marketplace might get tighter. I mean, you kind of look at it, you might make some judgment. Well, I don't think I might not even need the money. Well, you don't know. But if your competitors are getting that money and you aren't, then that could be the difference in terms of you being around, this time next year. You just don't know at this point.
Well, and I think so because you have some additional money because you weren't taxed on your PPP money, like those things. You effectively have some additional profits that you're not going to be taxed on. Those are perfect opportunities to make some investments. You can either retire some debt. That's always a good investment in your business, is retiring any debt that you have. You could look at, basically how to increase your marketing to really make sure that your pipelines fill, or you could really increase like your internal marketing. And some things that I'm looking at doing is we already do a commission-based pay, and 90% of my employees make $18 an hour over. So I'm looking at increasing my base pay to make attracting people easier at $15 an hour. And I might even go as high as $16 an hour. It really doesn't even scare me because the commission structure makes it all work. If you don't have a commission structure, that might be like sound insane. I don't know where you all are in your business, but my average technician makes about $18 an hour with the commission structure that we have. They do pretty well. Where that doesn't work always as well as some of our teams that do the deep cleans and things like that, they might average like closer to 16, 17 hours. But either way, I think if
the market is going in that direction. I mean, it's different from one city to another, but it's inevitable that wages are going up, and they're, it seems like they're going to be going up sharply, and that's maybe not even a bad thing, but we just need to modify our businesses and get prepared to deal with that.
So I'm looking at that. I'm looking at raising prices in conjunction with that. But so yeah, and also probably making some retention bonuses available this year for people that stay the whole year. That's going to cost some additional money out of the PPP funds and whatnot. But I should have it because we have this additional tranche of money, and I know that it's going to be a very competitive market for hiring. And I'm spending a ton of money, like almost $3,000 a hire right now. I mean, it's really, really high. I
Mhm.
mean, it's really high. So
You spend the money on the salary and hire good people and train good people, your overall cost of goods sold, if you will. Let's talk a little bit about the stuff that we've been talking about on Thursdays. Your overall payroll to revenue cost goes down, even though you're paying more because you don't have to turnover.
yeah, I think so. I think really doing some things to retain some people. So I've talked with you a little bit about this, about doing a retention bonus. And, so my thoughts are either basing it on everyone gets the same retention bonus or basing it on length of service with the company and paying it out either monthly or quarterly. I like the idea of monthly because I think a lot of our employees have a hard time thinking out 90 days in the future, but I like the idea of quarterly because it gives them something to work for. But monthly is probably the way I'm going to go, where we just break it down, whether it's $2,000 and they get, $180 every month, basically, as an add-on for a retention bonus for the year. So that kind of basically increases their base pay for 2021 with all this craziness going on and whatnot. So that's going to be a big expense, but again, we should be able to cover that with some of the additional PPP money, and that's not something we have to carry forward. That's just for this year.
But you're using the monies for the purpose that it's intended. I mean, the government wants you, the SBA, the Department of Labor, they want us to be good employers. They want us to hire people and provide good jobs. And these monies give us the ability to do that. So it's really kind of awesome, rather than these monies, more money's going out into direct, unemployment benefits or, going to, other public, sector means where it's not being used efficiently. I mean, you kind of look at it and say, well, gee, it has a lot of money, but if we use it responsibly, we can build stronger businesses and create better jobs and at the same time.
Yeah, I would say my goal is to have, so right now I have 75% of my workforce has been with me for 1 year or longer, which is the highest that's ever been for me. And that's going to decline some as we have to hire quite a bit to get back on top of the growth curve that I do believe is coming second and third quarter on in this year. But I think, having a top heavy workforce of employees that have been with you for multiple years is way cheaper than the common industry norm of having 50% of your workforce be with you for less than 90 days. I mean, right? I mean, that's very common to see companies where like the bottom half of their workforce is just a constant churn machine. So, my goal is to be someplace that people do want to think about staying long term. So, I wish I had felt comfortable enough this year to invest in a healthcare plan. I just wasn't comfortable that we were going into a new year and I wanted to take on a big major liability like that with, even though I felt like we could afford it, I wasn't 100% sure what the market would be like this year. And so, we still just encourage our employees to use the marketplace this year. But I think big investments in your employees this year are going to pay off and reducing turnover and finding ways to create a more stable workforce. Even though it looks more expensive, as a line item, on the bottom line, I think you guys are talking about profits. I think all of this can improve your bottom line if done smartly, done intelligently, and with some purpose behind it.
I think it can also do more than just impact the bottom line too. This is really a great opportunity for our industry as a whole to level up, right?
Mm-hmm.
Bring in the training. We can do all of the things that in the past, there were just too many people that they couldn't do it. They couldn't afford it. They couldn't find a way. Now's the time. Now's the time for everybody to be focusing in on, how can we be better as an industry as a whole?
There's some stereotypes about our industry that aren't flattering. And some of those stereotypes are there for, I mean, they've been earned. this is an opportunity for us to change that.
Yeah, I 100% agree. I think there's a lot of good employees in the marketplace, but if we're advertising $11 an hour jobs, I don't think that that's going to be competitive. And even $15 an hour, I feel like it sounds great compared to, like, I mean, 10 years ago, I was probably at $9 an hour. Like, I'm like, wow, there's been huge amount of wage inflation in 10 years, right? Maybe it's been long. Maybe we were $10 an hour back then, but it wasn't much more than that. Maybe it was 10 and a quarter, right? It was, we could just do these quarter raises. But I'm telling you, every year now, I'm like raising my base pay like $1 or $2. I mean, there's a huge amount of wage inflation, good or bad. I mean, it's a new challenge for sure, and it means that we have to be on top of our numbers, be really confident in what we charge our customers, and that's just a function of being a good business person at this point. You just have to level up on that stuff right now.
Yeah.
I think it's kind of forced us, though, to like do the math and have the courage to get out there and enforce the issue a little bit. And if we raise our wages and everything else that goes with that, the training and making good jobs, you're actually going to be more profitable. So it's kind of counterintuitive, and it's all about the quality of your workforce and the retention rate. We're reducing the turnover.
So Robin had a question. I don't know if he wants to clarify, but he had a question using PPP round 2 funds to pay monthly retention bonus. I think what I'm not doing is I'm not saying like these are necessarily the PPP funds specifically. What I'm saying is we should have more funds this year. We are operating. Even though we're down 25%, we're still generating revenue because we got these PPP funds. We should have more available funds this year to pay people more this year. But I don't want to commit to, like, let's say going from $15 to $17 an hour. So that's why I'm going to do a retention bonus for 2021, which will be like an effective hourly rate of like, maybe 16 or 17 as a base rate.
And correct me if I'm wrong, but I believe the logic is this allows you to get in front of your labor market and build a stronger workforce, which gives you the ability to get your rates up and generate the revenue in general you need to support those wages in years out.
Yeah, and I was going to do that anyway if they had clarified the tax implications of the first round of PPP. I was already going to raise my rates, my base wage to $15 an hour, because I would have felt more comfortable doing so with the amount of cash that we have retained this year in profits. So I think that alone was worth $50,000, $60,000, $70,000 to me. In retained earnings that I can put back into my company in the form of investments. And my biggest investment this year is going to be my staff. I mean, it has to be.
We've got somebody, this is from one of the Facebook groups, and they don't sometimes pass names, but wanting to know about the bank told them not to ask for forgiveness, and they haven't. Their PPP was $100,000 in round 1. Would they qualify for round 2?
I don't know. I mean, there's other questions there as far as, did they have a diminution of revenue? Obviously, they have under 300 employees if they got $100,000. But yeah, I would say most likely you should qualify for PPP. I'm not sure if the word reconcile means sign up for forgiveness, but yeah, you should, and you should at least investigate it more. I think there's a lot to it. And the other thing is that they've basically effectively said anyone with under $150,000 can just do like this short form forgiveness. I would still do the long form personally because I want to make sure all my numbers are right. And but basically it's a 1-page forgiveness, and you just basically you state that you spent the money on payroll and these things, but you don't have to come up with the documentation or the calculations as to how you got there. I'm a little uncomfortable with that. I think that probably doing the long form isn't that much extra work. I don't know what you think, guys, but I personally, I'm going to advise people, at least if they ask me, to just do the long form and, at least have it as a backup. If you do the short form, you should at least go through the exercise of doing that.
Right. I dropped the link to this article, and this is a pretty good recap of PPP round 2. It tells how you qualify. and it's the same calculation we talked about earlier in terms of 25% diminution in revenue quarter over quarter, 20 to 19.
The only other thing I would say is I think this money might go a little fast. I mean, they may even have they may even have to do a small bump up to this. So 150 million of it is coming from leftover PPP funds from round one. And then the rest of it is new funds that are allocated. So it's not like this is even actually that much new money, right? Were you aware of that, Tom? It's only 78 billion. Only like $78 billion of new money is going into this. It's actually some leftover money.
I wasn't aware of that. So
yeah.
The aggregate amount that they're pushing out this time is how much?
900 billion.
But for the PPP program.
238 billion, I believe, or 248 billion, something like that. It's under 250 billion.
How much was the first? How much did they push out in the first round?
I don't remember.
284.
And it went really fast the first time, and then they did a second tranche. So, but now they're saying, and I think that maybe it won't go quite as fast in some ways because of the 25% reduction, and the fact that so many businesses that didn't need to take that. First off, they lowered the total amount you could take to 10 million total between all the programs. So if a big business already took out a bunch of money, they can't do this again.
There are a lot of there's a lot of smaller businesses out there that are like in the construction trades and professional services industries that their business didn't miss a lick. They're not going to be able to show a demolition.
No, and there's tons of businesses that are not going to be able to do that. So, and a lot of businesses that I know that are even in our industry that like pushed forward hard, no matter what this year and had great years. I mean, they're probably looking at all of us. They're talking about this PP and like thinking, oh, we're all greedy. But the thing is, there's still tons of benefits for them in this bill too. They need to really look deep into this as far as this goes. Even if you don't qualify for a second round of PPP, there's so much good in this bill that can actually benefit your business if you really dig into it. And I think that is something that we really need to clarify. Is there's a lot here for small business owners, even if they're not going to qualify for a second round.
Your point though, Matt, is we don't want to procrastinate in terms of applying for a second round of PPP if we qualify. I kind of jumped in and started looking around. Like PayPal does PPP loans, or they did it the first round, but they don't really have things set up yet. Blue Vine, they were a big lender. They don't have it set up yet. Square. Most of the online portals, which were really efficient ways to get the PPP funds the first time around, even local banks, I'm checking around. I mean, the bank that you do business with, are they ready for second round of PPP yet?
Not yet. I mean, I just had a conversation with them today. I mean, they don't even have the rules. They don't have the rules in hand yet. So I'm going to go with my local bank. But if things are looking dicey, I would definitely be like looking at all like you said, PayPal and all these other, they're not even really banks. I'm not even sure how they're lending money, but I guess, they loosened the term bank to do this. Anyway, so I think you're right. I think the money's going to go fast. I think you need to be on the ball on this. And if you're feeling wishy-washy and don't think you need it, if you qualify, I think you should take it. We don't know what 2021 has in store for us yet. We don't know if there's going to be, big economic issues still in the first quarter of this upcoming year. And if you qualify, you should go after this money, I believe, unless you have some reason to believe that you don't want it, need it, whatever. Do yourself a favor and do your best to qualify for these programs, because I think they will benefit you and they will benefit your business, and they'll benefit. We talk about professionalizing the industry. I think if you can use this money to make yourself a top tier company with attracting talent and make some big investments, it's worth it.
And you made the point earlier, I think it was you, Matt, that was saying, if you don't need it, maybe you're like, okay, I'm just going to make it myself. I'm going to make it happen. I don't need this money. Your competitors are going to get this money, and they're going to be growing their businesses, and they're going to be using this money to level up. And can you really afford not to do
Yeah,
that.
they might be using this money to buy up other small competitors in your marketplace and become the big competitor. If they own 3 or 4 websites that's now funneling them leads, think about this. Like maybe they just bought them because those other companies had decent web positions, and now they have the top 5 positions online for search. I mean, let's say they used their money to do something like that. They spent $100,000 buying up some other companies that maybe don't make a ton of money, but had great search results, right? And so now they have like this guaranteed lead funnel coming in from all these other listings. I mean, those are investments that they were able to make because they took this money and then they had additional profits left over at the end of the year because of the favorable tax benefits of it and some other things. So I've had conversations with people that are feeling, that they shouldn't do it. And I'm like, all right, well, I wouldn't pay the government any extra taxes than I have to. I never feel bad about any any tax write-offs that I can legally take, and I don't feel bad about any legal tax program that they're offering because everyone else has the same advantages at this point, right? If you qualify, you should look at this as a way to make your business better.
I argue you have a fiduciary responsibility to your stakeholders to do that. You've got employees that are counting on you to provide good jobs. You got clients or counting on you to provide reliable and quality service, and being a good steward of your financial and other assets is part of your job description, man. You got a responsibility to do that, and part of that is you want to follow the rules and you want to pay the taxes that you're obligated to pay, but you don't want to pay more than that.
Yeah. I think we'll look back on this time and be like, this was the weirdest, most complicated time in our businesses, but there's a lot of opportunity here if we can get through this and make some smart decisions. I mean, when this show started, we were just stunned by some of this stuff, and now it's like we're still talking about it. Like I remember when me and you were talking about this in March, Tom. Like in February, we started having these conversations kind of on the sideline on Voxer, and what are they going to do to like prop up the economy? What are they going? I mean, I don't think we had any idea that this was going to be worse than 2008. If you really look at how much money went in at the financial crisis in 2008, I think this is like on a 4 or 5-fold magnitude larger at this point. I mean, not quite sure. I don't think we know yet, but
you're talking about trillions of dollars that the federal government is pumping
pumped into the economy. I thought that those packages, the TARP relief was $350 billion, and then the additional.
I don't think they ever. The whole thing added together, I think, was less than this bill that was signed yesterday.
Yeah, I think it was 900. I think it was $900 billion in the 2008 financial crisis was the final.
It didn't break $1 trillion, and at the time, that was like just crazy money. It's like what in the world? The world's coming to an end.
Yeah,
we're to the point here. What's another $1 trillion? And you know what? I mean, they're talking now. That. In the next administration, they're going to go back for more funds, and they're trying to come up. I forget. There's like another I think it's another $200 or $300 billion if the delta between $600 checks versus $2,000 checks.
Well, I do think that there's going to be some ongoing things that are going to happen, but not necessarily for small. But I think this might be the last that we see as a big benefit to us, unless they put more money in for these programs, if they're necessary.
This is interesting to see how it goes, though. If we use these monies responsibly and create good jobs and more jobs and better jobs, and the economy grows. I mean, you just never say never.
And there are more state opportunities coming. I guarantee it.
Yeah.
More state opportunities for sure are going to be coming down the pike. So. Well, I agree that with the way things are right now, we're not going to be seeing more money federally, but you can pretty much count on you need to be looking for what the states are going to be offering. Also, we don't want to forget that while it's been an unprecedented year in 2020, 2021 is going to bring us some different stuff too. We don't know yet. Everybody's excited, and we're all excited about the vaccine. But we don't really know what that's going to bring yet. There's some new stuff coming here. Yeah. We got to be ready for.
first round of PPP was 522 billion, but they changed the rules. Before the maximum payout was 10 million. Now I think it's 2, and your larger businesses don't qualify.
Well, the larger businesses drained that first round. I mean, they just crushed it.
Here you go. The top 5% of the loans in the first round were more than half of the loan value. So the 280 some billion that's allocated for this round is more than half of what went out here. They've frozen these guys out. So we should be.
I think it should be good. I mean, if you look at that first round, and I remember people like feeling like they were just like left out in the cold because like it happened so fast. And my bank was really good. They got on top of stuff. I got it. And I remember people feeling really like, really destitute, like that they weren't going to get, be able to get in on the section. I think if you qualify, they're going to make the funds available. But I do think that the 282 billion probably should be enough if you have excluded some of these larger loans, and the Lakers aren't taking out loans this time, and like some of these pro football teams that took out, or the pro basketball team, the Lakers, a couple of hockey teams, all these pro sports leagues. What's that?
Tom Brady.
Oh, did he? Yeah. I mean, that's what was really disturbing about the first round was the money went like this, but it went to really some pretty large companies that were publicly traded as well. Like that was disturbing too. Is that like if you're a publicly traded company, you have access to capital, right? Like you have access. You can dilute your stock and sell more stock and dilute your business to the stock market and raise more capital relatively quickly, where the rest of us don't have access to capital like that. So, I mean, that was a big change. So you're probably right. The money's probably more than enough when you exclude a lot of the people they excluded.
Well,
is that our time release?
Warning, Tom. That's our top of the hour warning right there.
All right.
Wow. Stay tuned, more to come. Everything that we've shared here is, couched in the reality and strong advice that you need to consult with your own professional, references, your CPA, you need to be talking to them. If you haven't spoken to them about this yet, you might want to make that phone call tomorrow. That's really what you need to be doing is use your team to help guide you through this. But the time has come. It's real, and if you don't have a plan yet, now's the time to start working on it.
And just one last thing, because this happened to us last time too. We got to be careful. Remember that this is a win. It's not a matter of whether or not it's a win or not for you. It's a win. It's just a matter of how much of a win, right? Because if you don't qualify for more PPP funds, you still get the tax credits. There's still stuff that is a win for you.
Just the tax relief alone is huge, and should allow you to make some big investments.
Yeah.
So. Yeah, I think everyone needs to step back from some of the rhetoric that was on the news about how this bill was bad or whatever was being said. Is like, as a small business owner, this bill has some fundamental things that have some meat and potatoes for all of us that are going to be good for the health of our businesses going into 2021. I think it puts us all on a better footing, and we just need to look at that and realize that we are going to benefit from this. And it's not the big banks this time. It's actually small companies like us that actually get to reap this benefit. It's rare.
Yep. So we'll be back tomorrow. We're going to be talking about our favorite books for 2020. Matt, thank you for your help, man. You are awesome. And this was good. So you guys take care, and we'll be here tomorrow. Bye-bye.
Bye.
Bye, y'all.